Welcome back. We have the dollar, Japan has the yen, and the internet, it has the Bitcoin.
What is the sentiment right now when it comes to Bitcoin and the future of this cryptocurrency?
There's never been anything like it.
So crypto as itself isn't a scam.
We're going to wake up one day and we're going to be in charge of our own money.
In the last 50 years or so, we've really become divorced from this idea of real money.
Bitcoin gave rise to a new class of millionaires and billionaires. What does that mean for the future of crypto?
Within 5 to 10 years, banks will become less and less relevant, just like landline telephones are becoming less and less relevant.
Owen Flewelling, you have been the biggest driver for me to get invested into Bitcoin, crypto, shitcoins, whatever. Because I know nothing about it. I remember in like high school and early university hearing about Bitcoin and things and like, oh, this is such this weird like sci-fi thing that people were investing in. And it was weird that I knew nothing about it. If I had invested back then like I thought I should as like an 18-year-old, I would be a millionaire right
Yes, same.
even just a few years ago, that like if I would have invested in crypto when it was at 30, and now it's up over, what's it now? At Bitcoin,
it's around 160 or so.
Really?
160,000.
I remember when people said 60,000, like that's a cap. It's never going any higher. But to the best of my knowledge, there's no more, like Bitcoin is a finite resource. As soon as it gets mined, it's only getting more and more valuable. Mm-hmm. So just in like the simplest terms, what is crypto?
Wow. So a cryptocurrency, we call it crypto for short. They're digital assets that are exchangeable in peer-to-peer ways without a third party, for the most part. They tend to use cryptographic technology for that, and to make it secure, so you can't steal from each other.
Cryptographic meaning encrypted?
Encrypted, yes. Yeah, and they tend to be built on what we call blockchains, which is simply just a ledger of accounts, one piece being built on the next piece, and it creates this long string of this block in a chain, so that
each transaction is a block.
Yeah. Well, each group of transactions. So when you think about Bitcoin, which is primarily what I'm interested in, a bunch of transactions will be grouped together into one block and then put confirmed as a block of transactions. So if you did every single transaction in that chain, only one per block, I mean, it would get quickly astronomically way too large for anybody to actually have a record of that blockchain. For me, the basis of all of it, though, and I don't know what direction exactly you want to go in, goes back to more of a money discussion and what is money. Whereas, 'cause Bitcoin being the first, it has that first mover advantage in a marketplace. But it has characteristics that many, if not most, of the other cryptocurrencies do not have. And those characteristics, what sort of separates it in my mind and makes it more of an interesting technology, we can call it. I see it as more than a technology, but we can, get into that if you want. So it's more interesting in that than the other cryptocurrencies.
So crypto as itself isn't a scam. I think a lot of people, especially boomers over the years, have thought like, okay, crypto is this scam that people are taking your money and it doesn't exist. It's this thing that does not exist.
Yes. That certainly happens. I mean,
there are coins that happens with.
There's a lot of crypto of the crypto world that are scams. That is a scam. But I think it's important we differentiate between crypto, and terminology is important, and you'll hear me use different terminology. Bitcoin is a cryptocurrency, but other cryptocurrencies are not equivalent to Bitcoin. simply because of some of their innate characteristics. And so I'm always very careful in using that terminology. I tend not anymore to refer to crypto when I speak about, I speak about money and sound money and talk about that.
Investments.
I don't speak about cryptocurrencies. I speak about Bitcoin. Because crypto overall, if you set Bitcoin aside and you take the tens of thousands at this point of different cryptocurrencies, I don't care about any of them except for maybe one or two privacy coins that are kind of interesting.
So a lot of people will see crypto as an investment. And the comparison there is to fiat currency, is to just the Canadian or the US dollar as to, okay, how much can I put in and then how much can I get back out of that?
Right.
Where I think I've seen you speak about it more as crypto should be the primary currency. It would make more sense for it to be Bitcoin specifically, should be the new dollar that everybody uses around the world.
Yeah, it certainly has the potential to be that. It has the potential to be a backing for fiat, fiat currencies, and by fiat, I mean a currency that government declares is money. That's what fiat kind of means when we're speaking about money. Will Bitcoin be the money we use to exchange back and forth every day? I don't know. But we're in such the early stages of it. It's hard to know exactly how that will play. Like, let's use the internet as an example. If you go back to our childhoods, the internet existed. It was around. You couldn't really do a lot with it, you know. It was cool. It was exciting. You could go on and look up people talking about these things on very simple web pages that you know, take 40 minutes for a picture to download on your Internet Explorer or whatever, you know. So that technology was there. You could do stuff with it. But nobody at that point would have dreamed that 10, 20, 30 years down the line, we'd be doing what we're doing with the internet. You know, with social media and YouTube and now AI and learning language models and all that sort of stuff. The technology it goes places that nobody can imagine. And I think we're going to see the same thing with Bitcoin, in that there's going to be layers built on Bitcoin and additional technologies built on Bitcoin, and it'll become a basis point for a financial future that I can't fathom. Probably some smart people, smarter people than me can fathom. But you know that there'll be layers of things built on that is going to change everything in the future. And I don't know that we can really. I certainly can't predict that. But
what then makes Bitcoin or like cryptocurrencies safer than other coins to be able to utilize or invest in?
Well, in order to have this discussion, we kind of have to go back to what is money. Because most people think the bills we carry around and the numbers that we have in our bank accounts is money, but it's not. That really is what I would differentiate as currency. But anything can be a currency. And so we have to say, well, what is money? And in the last 50 years or so, we've really become divorced from this idea of real money.
What do you mean by that?
By real money, or?
Yeah. Rather than paper currency, it's the digital, like in your bank account on a plastic card.
Yeah. So if we look at the characteristics of money, we have something called, we could say, soft money and hard money. If we look at what those are, we would say, well, hard money has certain characteristics like it scales over time, or stores value over time. Let me phrase it that way. It's durable. It doesn't rust or decompose. It's very easily transacted, so it's not difficult to exchange. Now you watch, I'm going to have a brain freeze and forget all the other characteristics of money.
But that's hard money. Okay, move on to soft money.
Well, soft money is simply the absence of those things, right? And so if you look at
more the bartering is things that you sort of ascribe a value to.
No, I would say that the dollar, the fiat currency, is soft money. So it has some characteristics in that we can exchange it very easily, but it doesn't store value over time very well. I mean, we know because of inflation, the value of the dollar continues to fall. It's not that the prices of everything is necessarily going up. That could be, but it's only going up in relation to the value of the dollar, which means the dollar is losing value. So if it's losing value over time, that makes it a bad store of value. I don't want to save money. I don't want to save dollars. Let me say that. Because if I save dollars, I'll be able to buy less with it next week, next year, in 10 years. So I want to store my hard work, which I get paid money for, in the best medium available to me. Ideally, that is the same thing you're using for currency. But we've had a divorcing of that in the last 50 years since the dollar really went off the gold standard. We've had this sort of separation of store of value and currency, medium of exchange. So what else does the dollar not do for us? One of the big things that I think the dollar doesn't do for us is allow us to transact without permission. So now we're moving a little bit more into, more security side of things. But unless you're dealing in cash, which they really want to get rid of, and we can't transact over distance with, I can try to send you money and there is a third party in between that can block that transaction.
It has to go through the bank.
It has to go through a banking system. If I want to send money overseas, it has to go through a banking system. If businesses want to do that, it's going through a banking system. If governments want to do that, it's going through a banking system. There is no level in which there is not a third party making sure, and we call it a trusted third party, making sure that you get your money and this person doesn't double spend that same money. Because this is a problem. You can say, well, let's come up with an e-cash where I can send it directly to you. And that's been tried many times before Bitcoin. There was many different versions of digital money that they tried to come up with, but they could never solve the problem of what prevents me from giving my $20 to you and Sally. Suddenly I've doubled the money, and either one of you gets gypped or we doubled the money supply, right? And so it always failed. And that's where the cryptographic technology, the cryptology, so to speak, gets utilized to prevent that from happening on the blockchain. The way the code is written, and I'm not a real technical person, so I'm not going to get into try to explain it because I'll butcher the technology side of it. But basically, it solves what's called the Byzantine generals problem, in that you get your money, it gets taken off of my side of the ledger, but I can't double spend it. And we can do this without ever seeing each other or even knowing who each other are in that respect.
So the checks and balances are there within the technology, as opposed to sending it through a bank for the bank to say, okay,
yes.
I took it from here,
yes,
and it's over here now.
Yes, that's right. So that's a really innovative. That is what money should be. It should be, in my opinion, a separation of money and state. We're sort of getting off the topic of what is money again at this point, but since we're here, we might as well mention it. Yeah, you've heard of it, the separation of church and state. I believe in the separation of money and state.
Yeah.
That as soon as the government gets involved, and that's what fiat currency is, it's just a ledger system that the government has said This is how you shall transact and hold your value because we say so, not because there's anything inherent in the dollar. It's simply debt. And so they've declared that, and now they control it in that sense. They can control how much is created through inflation, through the money printer. And they can also prevent transactions through the banks by pressuring the banks. And we've seen, there was a time when people say they would never do that, but we've seen cases of that. The system can be easily abused by those who want to abuse it for their own purposes.
And anything that we take the human element out of it, the ability for greed or the ability for just simple human screw-ups, seems to run better. Mm-hmm. But what makes Bitcoin or other cryptocurrencies safer than that? How do we know that the person who built Bitcoin hasn't built a backdoor to be able to pump and dump or screw everybody out of it?
Exactly. Yeah. No, and that's a really good question. And that's a common question because we're used to the digital mediums being an easy replicable thing. I have a picture on my computer. I can make 50 pictures of the same thing. You know, I can spread it everywhere, make millions of copies. But Bitcoin is a computer code to create a digital ledger, but it's an open source code. And so because it's an open source code, anybody can go in and read what the code is and what it says. I wouldn't be able to do that well because I don't really read computer code very well. But lots of people who are programmers have gone in and can go in and read it and go, there's nothing hidden here. This is all open. It's anybody can go and look at it. And in fact, anybody could go, I need to be careful how I phrase this so people don't get the wrong impression. Anybody could go in and change it. But the changes would only apply to them and their Bitcoin node. We can get into, if you want to get into that terminology, we can. But a node that is running that program, the Bitcoin software, they could go in and change the code if they wanted. But nobody else in the network would have to accept it, that change. So I could go in and make a code and say, there's not just 21 million Bitcoin, there's 40 million Bitcoin, and I have them all, but nobody else in the network has to accept that. It has to be done through consensus that all the network says that is a good change to the code. And as you can imagine, that's very difficult to do. It's very difficult to get consensus across the millions of nodes around the world on what the changes should be. So because at this point, it's very difficult to change the code, it's open source and everybody can see what is in it. There's no secret backdoors that can be exploited by anybody, not even the creator. And owning more Bitcoin doesn't give you any more power over the network.
Because all the nodes would be weighted the same?
Yes. The nodes are weighted the same, but a node is a node, and it doesn't matter how much Bitcoin you have doesn't affect your ability to influence the protocol. Not sure how else to explain that. If we look at the real world and we look at people who are on the extreme end of wealthy, they tend to have some undue influence on the system. But because Bitcoin is simply a computer program that runs, it does not care who you are. It doesn't care your age. It doesn't care your gender. It doesn't care whether you're wealthy or poor, or it doesn't care anything about you. It just TikTok next block. That's the saying that is often heard in the Bitcoin world. And it just keeps going. And if everybody stopped using Bitcoin tomorrow and the price fell to zero, which won't happen because I'll buy it all if it does. When it gets to $1, I'm buying everything I can. But if it did, Bitcoin would continue to run. Even if it was worthless and it was zero, it would, because it's a computer. As long as someone has a node and is running it on that program on that node, it continues.
I think it's hard to explain because even in talking about it, you continue to liken it to fiat currency. You're likening it back to, okay, how much it is worth. right? The value of it. Whereas it's something that we've subscribed value to. That's something we haven't done as a culture in years. We just like, okay, we grew up with Canadian currency and that's what we know as money. So we compare it to, okay, enough people have bought into Bitcoin around the world to make its value a certain thing. And so to be able to try to converse about it makes it difficult because it, like money, like the paper in your pocket, has no inherent value other than what we've ascribed to it. So people kind of get nervous, like, what is it? It's not really a thing.
Yeah.
But like we were trying to talk about, what is money?
Yeah.
It was really hard to, you can dive right down into it and really explain the Federal Reserve and where money comes from and gold standard, but people don't understand what Bitcoin is.
Right.
Or any cryptocurrency. So it really makes it difficult to have that kind of conversation.
Well, our mindset, I mean, and like you say, we're used to thinking in dollars. Everything that we ascribe value to, we compare it to a dollar amount. This chair is worth X number of dollars. You know, that car is worth X number of dollars. We don't say, well, this chair is worth X number of cars. Or, you know, that car is worth X number of pounds of potatoes. We use the dollar. And why do we do that? Because it's one of the really important facets of money. It's why money comes to exist in every single society, that we need a medium of exchange that everybody can use with everybody else. You hear a lot of times people on different forums, and it's all common in the homesteading world, well, we should just barter with each other. We should just do nothing but barter. I'm like, that's great until all I grow is carrots and nobody wants carrots. Then I can't get anything else, right? And so now I'm having to go find someone that wants carrots, that has something that I can get to trade to the other person that doesn't want carrots to get the, you know, like it just doesn't work in a bigger scheme of things.
Yeah, as it grows and throughout countries and throughout communities,
exactly.
It makes it, because the one I heard was cutting wood, because you only need wood for the winter time.
Yes.
But then, okay, well, if you want carrots or if you want onions in the springtime, you have to write an IOU.
Yeah, exactly.
Okay, that then comes back to community trust, and that goes to another subject about low community trust that we have today.
Yes.
But having something that based on some foundation, something that we all as a society agree upon. We have elected leaders who are in control of the Federal Reserve, then everything. Then, all right, we have this thing that we can exchange rather than IOUs between parties.
That's right. And so that's one of the features of money that has to be, you know, pretty widespread. And so I think we think in dollars because that's how we've just culturally that everybody does, and we've been raised in that. I do think that there will be a time in the future when people price things in Bitcoin or Satoshis, which is a fraction of a Bitcoin. I don't know how long that would take. And I think what has to happen, probably the catalyst for that, and this is what will be the catalyst for people actually spending Bitcoin rather than just using it as a store of value. When we start seeing more is when businesses start asking for it. Because if we're going to talk money, we have to talk economies. And what drives economies? Businesses and people's needs and wants. And so when businesses start saying, oh, I want to receive Bitcoin, that's when I think you're going to see that switch. And then they're going to say, well, if I'm going to receive Bitcoin for that, I have to figure out how much Bitcoin that's worth. And so if people need to know how much Bitcoin they're going to spend, I got to put the Bitcoin price on it. And then you're going to see that switch of people starting to be able to think in a different denomination. And it's probably going to take a couple generations, you know.
Does that come then, based on sort of everything you've said, does that come out of a foundation of a lack of trust for the federal government or a national government?
No, I don't necessarily think that's the case. I think
because if they hold the keys, so to speak, to inflation and being able to control currency, would being able to back out of that system and say, okay, we're going to go over to the blockchain,
right,
and more transact over here because it's safer, we can predict it, it makes more sense.
I think that happens because people innately know what is valuable. even if they can't explain it, people know that fiat's not valuable and that the dollar's not valuable. They also innately understand it's not scarce. And to go full circle back to what is money, scarcity is a big part of what gives money its value. I would say the biggest part. But why do you take the dollars you get from your day job and put it in the stock market or buy a property or say, well, I'm going to buy 2 cases of pasta sauce instead of 1 jar of pasta sauce? Well, why do you do that? Well, because you know pasta sauce is going to be more expensive tomorrow than it is today. And you know that property goes up in value over time. And you know
another
that
finite resource.
Yeah. And you know that the stock market tends to go up. Despite all the ups and downs, it tends to go up over time. Well, why do you do that? Because people know that cash is worthless. Nobody saves cash that really understands money. And I think most people innately understand. Get rid of this for other things that in the long term will benefit me more than a big bank balance. And I think people just innately know that. I don't think that if once you explain that to people, they go, oh yeah, I do that, but I don't know why I do it. I just do it. Why is property valuable? You know, why do people invest in the stock? What is the stock market? What is that? You know, why does it come about? Well, I give money and then they give me more money back. Like, what's the deal here? Well, it's because people are trying to beat inflation. That's what they're trying to beat, because inflation's been with us for the last 100 years. Longer than that, really. But if you want to stay in the modern time, since World War I, the end of World War I really is when this deviation from a hard gold standard started. And then the final nail in the coffin was in 71.
So speak to that a little bit. I'm not familiar with what the gold standard was and what that really meant for our currency.
Yeah. Well, the idea, in theory, the idea was you have X amount of gold and you have X amount of dollars, and the dollars are backed up by the golds, because the dollars really are a debt note. Because I didn't want to carry 100 years ago, I couldn't carry gold around. It's heavy. It's valuable. It might get robbed. You know, it's expensive to carry around because of its weight and size. So what started happening was they would say, well, I'll give you a note, which is an IOU. You can take it to the bank where it's secure. My gold is secure. And they'll give you an equivalent amount of gold equal to this note. Well, that's what dollars are. They're just notes of debt. And we've just ascribed permanent valuations to the different colors here in Canada. Any Americans watching won't know what I'm talking about. So we've ascribed certain valuations to them, and I can take that and redeem it for the thing that it's backed by. So in a perfect world, you have something like gold, which universally for thousands of years have been accepted as valuable. And it should be 1 for 1. If I have this much gold and it's worth this much, I can have this many dollars that I can then, or debt notes that I can distribute. And so that is sort of how the system was supposed to be. Well, banks and governments quickly realized, hey, if I have this amount, it's not all out. Nobody's going to come get it all at once. So I can do what's called fractional reserve currency. So I can have more currency in circulation, more debt notes in circulation than is backed by my hard money, that's in Fort Knox or wherever. So stemming out of World War I and all the debt and the cost of fighting a massive global war, governments really, they started printing more money. They really ramped up the fractional reserving of their gold stores. And they borrowed against the economic value of their countries, really. They get to the end. That's why the war went on as long as it did. You get to the end of that and they go, if we go back, we're going to have a massive collapse in our currency value and our economies, and that's not going to be popular. We better kick this can down the road a little bit, and we better kick this can. And that is where the whole debt economy started with the whole Keynesian economic model from the 20s. They had no clue what they were doing in the early days. Great Depression, because of the collapse of everything, because everything was just spending like crazy. And anyway, then they rolled into World War II. The same thing happens coming out of World War II. The difference coming out of World War II was the U.S. had said, well, we'll hold all your gold for you because we're the most powerful, we're the most safest country in the world. We'll hold all your gold for you. And then as time went on, countries kind of went, we kind of would like our gold back. We've rebuilt our countries. We've rebuilt our economies. Obviously, this is high level simplification of stuff, but we want our gold back. And the U.S. went, no, you can just use the dollar instead. Now the U.S. dollar is going to back everybody else's economies instead of gold. And that's what happened in 71. They separated the dollar from the gold standard. There was no equivalency anymore. Not even and there wasn't before, but they really made it official at that point and didn't even try to pretend. And so now we have a currency that's not based on anything. There is nothing that backs it except people's kind of looking over their shoulder going, well, we're just going to play ball because we don't want to lose everything we got.
We just agree. We've got this number in our bank account, and I'm okay with that.
Yeah, and there's lots of people that would argue and say, well, it's based on the economic production of a country. That is what's backing their currency and think. But the reality is, there's nothing to stop a government from overspending and having their federal. For us, it's Bank of Canada. In the U.S., it's Federal Reserve, bailing out and saying, well, we'll generate more debt to for you to borrow against. We'll be the bank. We'll be the lender of last resort. But they're just making up numbers. They don't actually have anything to loan out. They're just making up numbers. And
I also heard Canada sold off all of its gold reserves as well. So Canada doesn't have any.
Yeah, I think a lot of countries have done that. Yeah. And some now, of course, are buying, secretly or not so secretly.
Because as we see sort of things go on in the States being the reserve currency, I think countries are wanting to move away from that with how volatile things are politically or sociopolitically in the States.
They're really tough. See, if you look at inflation, who suffers most from inflation? From the increase of a monetary supply?
I mean, everybody does.
Everybody does.
The citizens of a relative country.
The further away from the money printer you get, the more you suffer. So the people who are closer to the money printer, they don't suffer as much because they're creating dollars and they're buying uninflated goods at uninflated prices.
What do you mean by closer to the money printer? Like being the companies that are responsible for that? So the Bank of Canada, then the banks, and then further and further?
Yeah, primarily. One could argue that government is as well because they're the largest borrower. And then they're spending it on whatever programs, pet projects. But they're doing it at uninflated prices. Then we have more money in circulation. The value drops, which shows up as things costing more. And so, but we're not getting, we're paying uninflated, we're paying the inflated prices, but we didn't get any of the free money. So that's what I mean by being further away from that money printer. Well, if you're in the United States, even if you're just a regular person working a day job, you're still closer to that money printer than the foreign person, the person that lives in another country whose currency is based on the U, because it just goes out in ripples, like a wave. And so the further away you get from it, you're paying the higher inflated price, the further out you go. I don't know if that's not really a good way to explain it, but I think you get my point. That countries want to get away from being backed by the dollar because of that, because they have no control over if the U.S. decides to inflate their currency more. They can't control that, but they feel the consequences. So you have smaller countries who are like El Salvador and Bhutan, there's a few others who are saying, well, we're going to find something else that we can use as some sort of monetary standard, because we're tired of getting crapped on by the United States. Maybe not directly, they might not be doing it directly, but they're still feeling those consequences.
Was the debt in the U.S. or in Canada, North America, right? The amount of debt that they have then ascribes to the lesser the value of that dollar.
Right. Yeah. So if they can find something else that actually goes up in value over time, and they're a small enough economy, they can make that switch. They can pivot easier. You and I can pivot our budgets way easier than a very large company or a nation state.
What effect would that have on the world stage if countries started to do that?
Well, I'll tell you the immediate effect is the IMF gets very upset. The International Monetary Foundation or Fund is basically a world bank that loans to nation states, but it's not a we're going to help you out, bud. Pay us back when you can. It's we're going to help you out, and you're going to now do some things for us, where you're going to give us or our interested parties mining rights or
who controls
whatever.
the IMF then?
Well, that's a good question. I'm not big on my knowledge of that, but there's a number of major nations that contribute to that. I would say the U.S. probably is a major.
Basically, if you've got the biggest arms and you've got the most pull, you can say, hey, do this or else.
Yeah, we'll loan you this money, but now you're going to let this very connected company or whatever come in and get really cheap. Whatever, resources.
The more we talk about this, the more just the world feels like one big mafia run by the United States.
Absolutely is.
That it's just the threat of violence that, hey, careful or else.
100%.
Especially not backed on anything like tangible. Like if it's backed on the gold standard, okay, if you have more gold or you mine more gold, okay, you have more value. Your country then can benefit. But if it's backed by the U.S. and then U.S. implodes, then you're SOL.
Yeah. Or if they suddenly decide they want to not be friends with you anymore. I mean, I'm not pro-Russia any more than anybody else, but when Russia attacked Ukraine, what did the U.S. do? Yeah, we're going to unbank you on an international scale. They said, well, you're not allowed to transact in a dollar. And oh, by the way, all the money that you as a nation have with internet, we're taking it all. We're cutting you off.
Wow.
And Russia just was stuck. Like it was like they had their pocket change and that was it. And they had that was a big economic hit. So what did they do? Well, they went to places like China and all these other nations that aren't really friendly with the US per se, or NATO, and said, well, we're going to start doing deals with you, and we're going to have to start accepting transactions in something other than the dollar, and it'll have to be direct because the international banks won't transact with us anymore, and that all happens in US dollars.
But to move past that mafia that is the U.S. currently, crypto or Bitcoin specifically is an option to be able to do that.
Yeah, it's certainly because it is peer to peer. There is no third party. To bring this back to full circle, what we were talking about, I can send you Bitcoin directly, and there is no trusted third party. It's called a trustless system, which sounds terrible. It's a trustless system. It can't be trusted, but that's not what it means. It means there is no intermediary. There doesn't need to be an intermediary. And so because I can send directly to you, there's nobody to stop it. There's nobody that can say, hold on, we don't want you to make this transaction.
You're at war with Ukraine. We don't like you doing that.
Right. So it's a great freedom tool on an individual level, but that's going to have ripple effects throughout all economies as things scale and as it becomes more widely adopted, which I don't see slowing down. There's been zero indications that the adoption of Bitcoin is slowing down. If anything, it's accelerating.
Well, as things get more volatile around the world, people are looking for something to. If we were still, perceivably, if we were still backed by the gold standard, it would make more sense that, okay, gold is safe. You've got it held somewhere, whether it's Fort Knox or somewhere in the mountainside. You've got that.
Yep.
But there is nothing to stop the Federal Reserve, or like you said, the U.S. cutting off a country that they don't like for whatever sociopolitical reason.
Yeah, that's right.
But is Bitcoin something that is equally as visible as it is trustless? So are not all the transactions able to be looked up and you can see anything?
Yeah. And that's one of the things that makes it so secure, is that you can verify all the transactions. So now it doesn't say Owen sent Bitcoin to Ben. It just says this address sent Bitcoin to this address. So it's pseudo-anonymous in that respect. Through chain analysis and KYC laws, know your customer laws, that most countries have in place, you can kind of track the movement through addresses. And so it would be reasonable to assume that if I purchased Bitcoin on an exchange, I sent it to myself. But there's no guarantee of that. But if I received Bitcoin from somewhere and then tried to exchange it for cash through an exchange, anywhere you have those touch points with the banking system or your real world identity, there's going to be a loss of anonymity.
So it ends up sort of being similar to like a VPN, where the more you can bounce off of different addresses, it makes it more complicated to be able to check back, to be able to see who it actually was.
Yeah, there's certainly lots of technologies out there to obfuscate it if complete anonymity is your thing. And when I mentioned at the beginning about specific cryptos that were interesting, one of the privacy coins are the ones that I kind of haven't discounted as being complete garbage.
So what's a privacy coin then?
Well, a privacy coin has complete anonymity.
The ledger is...
It's completely anonymous. There's no way to actually know where the transaction went. And that's built into technology. And I don't really fully understand all of that, the technical side of that, how it's done, and different ones do it different ways. So it's not even consistent across them all. But there are some that are completely anonymous. But that comes with its own set of complications as far as adoption and how to store it and its
risky
acceptability in. Yeah, I mean, there are some actually that are not open source, so you can't read the code. So those ones I kind of probably would stay away from. But they probably have to obscure their code somehow to not make it vulnerable. So if you're looking for that sort of anonymity, it's not in Bitcoin, but that is also part of what gives Bitcoin its security, is that anybody can verify. With fiat, you can't verify anything. Like, go to the bank and ask for all the banking records. They're not going to give it to you. They might not even give you your own, But with Bitcoin, we can verify every transaction. Gold. How much gold's in the world? How much fiat's in the world? Nobody knows. Even governments can't tell you how many dollars there are. It's not a verifiable supply, but Bitcoin, because of that open ledger, we can verify every single one and where it is. Not necessarily who has it, but it's at this address. When I say address, I need to clarify that. It's the address on the blockchain, not your own physical address.
It's like an IP address.
It's on the blockchain, because you don't actually hold Bitcoin yourself. You don't hold it on your computer or in your wallet. It's just simply giving you access to where it is on the blockchain, because it's just a ledger of account. See, Bitcoin is a ledger of account that says you own this much in value and I own this much in value, and we're going to exchange that value for whatever goods and services are in the transaction. And it's simply allowing to say, well, this much value has been transferred in Bitcoin to this other person. And so now we in our ledger, we can say Bob has 2, Sally now has 1, and now Fred has 1 and Bob has 1 and Sally has 1, because another so it's just tracking that ledger.
So if I wanted to buy Bitcoin right now, like after this, I wanted to buy Bitcoin, what would be the process?
So the easiest way is to simply sign up on an exchange, a reputable exchange, and exchange
Something like
fiat.
Simple, Robinhood, any of the other.
I don't know if they do. I'm not familiar with
I guess
those.
those are more stocks than.
I would go to more of a Bitcoin only exchange. The one I like to use is called ShakePay, and I brought this just as I have a few of those. Sorry. So that ShakePay is a company. It's a Canadian-based company. They're pretty much a Bitcoin only company, and they do. They have a bunch of different services, and you certainly don't have to use ShakePay. There's BitBuy, CoinSquare, and there's a few others as well. Bull Bitcoin, those are all Canadian. And so you can sign up for their service, get on it. You have to put a bunch of information in because of the Know Your Customer laws, and then.
Doesn't that go back to giving another third party access? So the same problem we have with the banks, then you have on an exchange.
So if you hold your Bitcoin on an exchange, absolutely. At that point, you no longer have a custody of it. That's the same as having your money in a bank account. You can say, well, how much money do you have? And if you have $1 million in the bank, well, I have $1 million. No, you don't. Bank has $1 million. They have $1 million that they have said they'll give to you if you ask for it. But if you walk into any bank and say, I'd like to withdraw my $1 million in cash, they'll go, no, we're not giving that to you. Right. So in that sense, an exchange is just like a bank. But if you self-custody that, which you should be doing with your Bitcoin, it means that nobody else can have access to that unless you give them access to it.
So what would that mean? Holding it on something like a cold wallet?
Yes. So there's a couple different types of wallets. So you go through the process. You purchase your Bitcoin. You have your Bitcoin now on your exchange, and then you would create a wallet and send that Bitcoin to your wallet. Your wallet could be an app on a device, whether it be a phone or a laptop computer or whatever. Or, and actually I brought something in here. I would bring it out. It could be a device that's purposely dedicated to the storage of cryptocurrency. So this is one. This one's empty. So just in case you're wondering, but this is made by Ledger, which is, I don't endorse any particular brand, but this is just one I happen to have. So I brought it.
Looks just like a thumb drive.
It looks just like a thumb drive. It's really about pretty much all it is, but it is programmed to have some certain security features. And this one does all kinds of different crypto. Some are Bitcoin only. You have to do your research and figure out what's going to be the best fit for you. But this is a hardware wallet. And so this air gaps it essentially. It takes it off the internet. It doesn't take it off the internet. Your Bitcoin's still on the blockchain, but this limits access to it because this can be hacked, right? Your phone could be hacked.
Your ShakePay account could be hacked.
Your ShakePay account technically could be hacked. Anything that's connected to the internet is called a hot wallet because you get a virus, somebody, gets your passcode, or I don't know, keystroke loggers. Like there's all kinds of little, things that but this is air gapped. And so until this is attached to something, it cannot be accessed. So there's no.
So basically the blockchain says the crypto was sent from an exchange to this address, and that address is no longer available, basically.
Right.
Until it gets replugged in, and then it's like, okay, here it was stored at this address, and that address is this drive that is.
Not exactly quite like that, because there is a public and private key signature, and that's how the security. I can give you my public key for you to send me Bitcoin, but that doesn't give you access to my Bitcoin. The private key is what allows me to send out. If you don't have that private key, you don't have any access to my Bitcoin. The public key is sort of like a one-way key, a one-way address in that sense. Does that make sense? Mm-hmm. And the addresses on the blockchain aren't necessarily like they're the number of addresses that can be generated with the cryptography and we're talking about is almost infinite. Like it's such a large number that it's almost infinite. Just because
that would be the number of accounts, not the number of Bitcoin.
That is the number of transactions. Like
Okay.
the key for it's really hard to explain because it's not just as simple as saying, well, it's an account. Yeah, number of Bitcoin, and we didn't really talk about scarcity too much. But yeah, there's 21 million Bitcoin. That's it. That's forever. There can never be more. There will never be more, no matter what anybody does. If they do try to change the code to make more than 21 million Bitcoin, it's not Bitcoin anymore. It's something else. You can call it whatever, but it just become then something else. There'll be a split in the chain and the true Bitcoin will continue on. While the other, because that's happened, it's called a fork. Bitcoin's has a number of forks over the year, and it was simply people wanting to run a different code on their nodes. And the consensus essentially, through their adoption, voted in that sense, whichever way it went. And pretty much every fork has gone to zero in value because scarcity matters to people. People care about scarcity. So, yeah, scarcity is really, I mean, we should have talked way more about scarcity probably than all this other stuff we talked about. But I don't know how long we want to run
fine.
here.
Let's address it a little bit because when I first started hearing about Bitcoin, it was about Bitcoin miners. It was about like using them to heat your house while you're actually mining for Bitcoin.
Yes.
So what is the process of like mining for Bitcoin?
Yeah, that's really interesting because people are so interesting. Because the first thing they say is, well, then they're like, well, I'll just get a supercomputer and mine it faster, and then I'll have more Bitcoin, right? But it doesn't work that way. And so the miners do a couple functions. What they're doing is they are solving a complex math problem, essentially, using really fancy high-end processors, computer processors. In doing so, they get the reward of confirming a block on the blockchain. So confirming the transactions in a block. Let's say there's 100 transactions, they confirm it in that block, and they get a reward for doing so. So they get all the fees that everyone's paid to have their transaction included in that block. Because if I'm willing to pay more, I get to the front of the line. If I'm willing to pay less, I might get bumped down a block. And maybe I get in the next block. But then there's also something called the block reward. And this is how Bitcoin comes out of the total supply and gets put into the ecosystem, the market, the circulating supply. And the miners get that. That is their reward for having completed and the math problem and confirming the transactions on the blockchain. They then can do whatever they want with that Bitcoin. They can keep it. They can sell it on the marketplace. But since there is a lot of, takes a lot of energy to run these computers, there's fairly high expenses associated with mining. They have to pay their expenses. They're a business. So they usually sell at least a portion, large portion of that Bitcoin to pay their bills. That is then on the open market. And because there's people constantly buying and selling on exchanges, that is how the inflation rate of Bitcoin happens. So there's 21 million Bitcoin, but there wasn't 21 million Bitcoin available on day one. And that's something that separates shitcoins from Bitcoin, in that shitcoins, hey, we have a supply of, and they can make up whatever number they want, 1 or 2 trillions. Let's just say you make a shitcoin and they say, well, we're just like Bitcoin. We have 21 million. I've got 21 million.
I've got 20 million. Yeah. You can buy the rest.
Yeah, exactly. Yeah. Bitcoin didn't do that. The creator, understanding that no one person should have all the supply and have to disseminate it, made it so that even himself had to mine for the Bitcoin to acquire the Bitcoin. And is the price, the supply has a very low inflation rate over time, and the inflation rate gets less every 4 years. So the first 50 Bitcoin per block, a block is about 10 minutes long. It takes about 10 minutes, and there's an algorithm that adjusts the hardness of the mining problems so that it keeps it at 10 minutes, so that nobody can mine faster. So if you come up with a supercomputer, you can try and mine Bitcoin faster, and it'll change the hardness algorithm to match your supercomputer so that it keeps the block every 10 minutes. Does that make sense?
It sounds like a gamified currency.
But it's all happening in an open source code. There's no one behind there's no one behind the curtain pulling strings. It's all just how it's set up to run.
And you get the rewards for confirming different blocks.
Yes.
It's a video game. That's so it is,
cool. But they really, like, miners are so important because they provide security. So what if I try to put a fraudulent, what if I try to double spend, right? I put a fraudulent transaction through. Well, they determine which transactions go in the blockchain simply by the code that says there can't be double spends. There can't be, can't have somebody trying to spend the same Bitcoin twice, for example. And so they would reject certain transactions based on those principles. But the principles are not some guy sitting in office going, I don't like this guy, but I do like this guy. It's a code that is unchanging and everybody can read. This is the rules. You can't double spend on our network, right?
And there's millions of miners around the world that are...
Yes, and then that's the other aspect. Decentralization. What is the fiat system? Very centralized. To the extreme, where there's literally one person sitting in an office at the Federal Reserve who makes all the decisions. And yeah, they have a group of people that make decisions, but really, and how much undue influence is put on the Federal Reserve by the president or Congress. Even if you want to say all of Congress and the Senate and the president, that's still only a few hundred people out of 8 billion, right? So it's very centralized power. But in Bitcoin, the consensus has to be made throughout different countries, different economic status, different local current regulations that would affect, the miners, but it's all across the world. You can't just go, well, we're going to stop mining in this country. We're going to make it illegal. Well, miners are just going to move somewhere else. They're just going to go, hey, we're going to move to Kazakhstan or wherever because it's legal there, and we'll just move our business there because it's very, it's easy to move around. It's not gold where, well, you have to mine there because that's where the gold is. You don't have to be any physical location can be a Bitcoin miner.
You're only limited by internet access and energy.
Right. And that's not, internet access isn't an issue anymore. With satellite technology, you can get internet anywhere. And the reality is you don't even need the internet in many ways. You can move paper Bitcoin. There are ways to do that. In fact, most of the early wallets were simply keys written on paper. So I could write out the key to a Bitcoin address and hand it to you. Now you have the key.
Now you have the Bitcoin.
And you have the Bitcoin. So yeah, it's not as convenient as having the internet and having these instant transactions and have everything look real pretty on a app. But it's possible to do it that way. And they're even coming out now with technologies that don't require the internet where you can transfer Bitcoin via Bluetooth. So if we're in proximity to each other, I can Bluetooth you Bitcoin from my wallet to your wallet. Now you might not get final settlement on that until
you're connected.
But the exchange can happen.
Well, theoretically, you could do a number of exchanges, and then as soon as you get reconnected, it just reconfirms.
Yeah. And so then we get into layer 2, we get into lightning, that's exactly what lightning is, or these layer 2 protocols. And so then you're getting layer 2 protocols, which are coming off the chain. So you and me both have Bitcoin off chain. We can do really super fast, cheap transactions in our little own ecosystem. And then at any time, any single person can put it back on the chain. And so that's allowing an exponential number of transactions to happen that maybe would be limited by the normal blockchain. Because one of the arguments, because I want to steel man this side. One of the arguments and downsides, legitimate downside to the Bitcoin blockchain is, well, what if the whole world is doing it? I mean, it's going to fill up and it'll be crazy expensive to exchange Bitcoin, because there'll be so much traffic and so many transactions trying to fit into the block size, which is limited. Each block is limited in size. It can only fit so many transactions. It'll just become completely congested, and it'll cost $1,000 to send $1 worth of Bitcoin, right? That's the argument against it. But we can use side chains for all these transactions. And then all the main blockchain is doing is doing that final settlement on the main chain. So there's all these layers that can be built on the technology that will allow it to scale way past, just what it's doing right now. The other thing I want to circle back, because if we want to get adversarial towards Bitcoin, because I think that is valuable to be adversarial about it. One of the other big arguments is, there's two more that we should talk about. One is criminal activity. I hear that one a lot. Well, especially in the early days. Criminals use Bitcoin, right? And this is so not an issue anymore. The criminals do not want to use Bitcoin. They might want Bitcoin
because it's visible.
It's visible. But the dollar is the biggest criminal activity medium that there is.
Yeah, we already established that it is a mafia.
So it's dumb to say, but criminals. Well, are you going to not stop using the dollar because criminals use suitcases full of cash go everywhere every day for criminal activity,
buying drugs and
exactly. And they have the same challenges. How do I get this back into the economy and not have to get caught? So then you get money laundering and all that kind of stuff. So that's fairly easy to dismiss now, and especially since it's no longer a fringe thing. When you have U.S. government saying we're going to buy Bitcoin, and you have massive corporations and banks saying we're going to buy Bitcoin and we're going to put it on our balance sheet. I don't know if you're familiar with Michael Saylor. Definitely worth listening to Michael Saylor. Anything Michael Saylor has is interesting and very valuable. He's a Bitcoiner for sure. But he owns a company that produces value. They do stuff. But what they've been doing in the last few years is buying Bitcoin, borrowing money, buying Bitcoin, and putting it on their balance sheet as an asset. Because the Bitcoin price goes up, their shares go up. And they're basically increasing their company's value and their shareholders' value exponentially in that way. And now what we're seeing is Bitcoin treasury companies that are starting up for the sole purpose of buying Bitcoin and putting it on a balance sheet because it's an asset. It's considered an asset. That's all they're doing. That's the only reason they exist. So we're seeing this massive institutional company, institutional, I guess I'll call it, just for lack of a better word, buying of Bitcoin, of the asset. Well, that really legitimizes it in a lot of ways, and especially legitimizes it to to Wall Street and the big banks. And all these people that raved and ranted against Bitcoin for years are now all of a sudden going, well, actually, it's probably good to have at least a little bit of Bitcoin. You see the ETFs. You have BlackRock coming out with their ETF at the beginning of the year or whatever. And they just, now all these people that were investment brokers who couldn't legally buy Bitcoin because who holds the keys? Now they can buy something that's backed by the Bitcoin, but it's an instrument that is held, that BlackRock sells. It's an investment instrument. So they can get Bitcoin exposure So they get the value of the price fluctuation, but because they couldn't hold Bitcoin privately, because who holds the keys and what keeps you from just running off with the keys to Bermuda, or whatever. Yeah. It gave, so now you have all this money dumping in from, retirement funds and all these things, and people who don't want to secure their own Bitcoin, but they want that exposure. So you're just seeing this massive institutional adoption of it. That really blows the whole criminal side of it away. It's not like, this isn't fringe anymore. So that's the one argument against Bitcoin. The second argument, and this is one that still is common, but it's so bad for the environment. It takes so much electricity to run these miners. Bitcoin does more to prevent wasted energy than any other instrument in the world that I can think of. It's probably, in many ways, the most environmentally friendly currency we can possibly have. So why do we say that? Well, what is the one problem with producing electricity in any remote location? Where's our resources mostly are in remote locations. You don't find resources in the middle of San Francisco, right? It's way out away from the cities, whether it's solar, wind, these other so-called green energies, or oil fields or whatever. So where's our demand? Well, our demand's back in the urban areas.
So you need to build infrastructure to get.
So now you got to build all this infrastructure. So yeah, I can build a pipeline that takes oil, but what comes with every oil? The gas, right? Every oil well has that methane or I forget there's another gas there. I forget what it's called right off the top of my head, but what do they do with that? By and large, they burn it off. They used to just release it. Now they can't do that, so they're required by regulation to burn it. So you see all these gas flares. Wasted energy. Really valuable resource that could be utilized, but they don't want to build the infrastructure to get it anywhere.
You don't have proximity.
You don't have proximity because you're 1,000 miles away from, or hundreds of miles away from, where they can actually use the energy. So what can they do? I can take a natural gas generator and a container full of Bitcoin miners. I can drop it beside one of these wells. They'll probably pay me to do this. All they have to do is pipe that natural gas into my generator, fire it up, and I'm mining Bitcoin using that energy, and then I'm sending it via the internet to market. I'm sending that electricity to market in that respect, and I'm bringing that economic value to the jurisdiction I'm in. Solar farms. What's the one big problem with solar farms? Peak demand, right? Everybody's home, flips on their air conditioners, making supper, doing their washes, right? That's great if you're in California and you have these solar farms and they're producing, it's sunny and they're producing. And then everybody goes to work, right? And all that stuff shuts down. And now what do? Well, now they have way too much energy. Well, battery technology is not there to store that energy, so they just have to dump it, right? Or they have to downsize their systems so that they don't have this overload of energy. But then they can't meet during peak demand when they really do need the electricity, right? So that's the balance of some of those renewable resources. Well, I can flip a Bitcoin miner on and off. It's instant on, instant off. So a Bitcoin miner actually can work with a solar farm or a wind farm for those times when they have a lot of excess energy. I can run my miners. When all of a sudden they have more demand from the rest of their marketplace, I can turn my miners off and allow that electricity to go to those other people. And so you can use it almost like a battery in that way by utilizing that resource, mining something that's very valuable, and it brings economic benefit to the companies if they're the ones doing it, to the miner company if it's an independent, but also to the infrastructure and the surrounding economy by allowing them to use a more green energy that maybe they otherwise couldn't, simply because of some of those challenges. There's lots of other different ones, but that's just a few ways that Bitcoin actually is way more green friendly than your traditional.
Has more capacity.
It has more capacity.
Like,
it can solve some problems, I guess, is the best way to put it.
Especially if you look at it's utilizing that otherwise spent or dumped energy.
Yeah.
Whereas I guess dollars, the argument would be you're cutting down trees.
Yeah.
To print and all that.
Yep. So anyway, that's a couple of the common arguments I hear that I always like to throw that out there and say, hey, actually, if you look at it from a different way, this is actually, it uses electricity, but if we're using an excess resource that's otherwise wasted, why not? And that happens way more than I think we realize, because the margins on Bitcoin mining are so small. Bitcoin is always chasing the cheapest energy it can, and that the cheap energy is usually that which is in abundant supply because of the laws of supply and demand. We're going to constantly chase where can we find the cheapest energy, which will be the excess energy, so it'll reduce waste.
So for companies that don't, or not companies, for countries that don't have power generation, or you're living off grid, basically, would that pose problems on an international level for them and their adoption of cryptocurrencies or even Bitcoin? Because if Bitcoin becomes the international standard for currency, the way that everything's checked, I mean, it seems like it is sort of the best bet for the individual, right? It doesn't really favor large organizations or large companies. It more so favors the individual because you have that accountability rather than the mafia, if you will, that are making those choices for you or printing more money. But when it comes to countries that don't produce a lot of power or can't produce a lot of power, their ability to be able to utilize Bitcoin would be less so.
Simply because they couldn't mine it for themselves? Because, I mean, there's multiple ways. I mean, you can get Bitcoin in many ways. So a country like that, they could buy it on the market rather than mine it themselves. I'm not sure if that's what you mean, or if you're thinking just
being able to transact, I see. Being able to transact offline allows that capability. So you kind of then go back and, whenever you connect to the internet, it'll connect that node or connect that block and be able to check.
But the reality is there's not very many countries in the world right now where you can't take one of these and get internet. Even if I can't get it everywhere, I can go to a place where I can get it, And certainly the governments and large institutions have access. And even the individuals. Like if I don't have internet in my home in sub-Saharan Africa or, pick a remote location on the planet, I probably know a place I can go and get it. So
I guess everybody, especially in the Americas, we kind of fantasize about the doomsday scenario of like everything's down, we can't do anything. But I mean, if that goes down, the banking system's down anyway. So
everything is down. If we ever have some sort of a long-term crash of infrastructure like electricity, or
everybody's raving about nuclear attacks,
right? Yeah, something like a nuclear winter happens.
Everything's down anyway.
Everything's
whether it's
down
Bitcoin,
anyway.
Whether it's fiat.
Exactly. You better be counting your bullets and beans and band-aids because
I like that. Bullets, beans, and band-aids. I'm gonna use that.
That's you're really thinking of other problems at that point. You better have a good local network at that point, because that's all that's going to matter, because the rest of the world, nobody in the rest of the world is going to be transacting or conversing with you on any level. So Bitcoin I would say Bitcoin solves the majority of the world's problems. But in that extreme scenario, the reality is we're still back to local communities, local connections and having a lot of resiliency and personal knowledge on
growing food
and getting what you need.
Which we
to
should
survive.
be putting an emphasis on anyway, but then
right.
taking advantage of things and technology like Bitcoin to be able to operate in the modern world.
Yes, exactly. Yeah, you can't. But it's just, you see this also in the homesteading prepper world, because I've been in that world for a long time, and you see the people say, "Oh, I've got the guns and the ammo. I'm ready. You know, if the zombie apocalypse, I'm ready." And you go, what are you going to eat, bud? You can't eat bullets. Like, well, you can eat bullets, but that's kind of a last resort. You know, and so they're like, well, I'll just go hunt for what I need. I was like, there are not going to be any animals left, because everybody and their dog's going to be doing that, and including the dogs. So you've got to have that sort of well-rounded attitude about it. So yeah, you can't just buy Bitcoin and think I'm set because I have the most valuable asset in the world. No, you also need to think about these other things, and you can't just think, I've got my vegetable garden. Well, in that scenario, you're probably going to need more than just vegetables. Sorry, vegans. But you know, that's the reality of living, and you can't just say, well, I've got buddy down the road who I'm going to go visit. No, you've got to be well-rounded, and that's what homesteaders are so good at, is being well-rounded and having their fingers in lots of pots, so they have as much resiliency in their lifestyle as possible.
Whether it is growing food or growing animals or having those bullets
or understanding the economics and having, you know, storing in a valuable asset instead of being reliant on that fiat garbage that we have to. You know, that's the reality. We're in a period of transition where, when it comes to the economics, where we have to deal in dollars right now, but I don't have to save in dollars. I have to transact in dollars. MB Power, you know, my internet, you know, the grocery store, they all only take dollars right now, but I don't have to save in dollars. And so that's an area I can influence. And so I'm going to save in the best asset I have available. In the past, it was gold. In the past, maybe it was just long-term food storage. You know, like you picked whatever it was that was important to you, and that's what you saved in. And I think Bitcoin is an important piece in that savings vehicle that we should be considering.
in the new world where you can talk about investing in stocks and you can talk about investing in real estate if you have the means or the money.
Yes.
But investing in Bitcoin, because of that fractionability, it doesn't take much to be able to invest and then see your money, your investment grow.
Yep, that's right. Yeah, it's certainly not a get-rich-quick scheme, and I do get those people as well that I talk to that are like, so if I put this in, I'll be rich next year? I'm like, well, no, it doesn't really work like that. You know, you have to think of it in the long term. Something we haven't talked about, time-wise, I don't know what your limits are here, but the time horizon thing. I found, for me, Bitcoin changed my time horizon.
What do you mean by that?
So let's go back to the idea of getting rid of dollars for things as fast as possible, which is what most people do. They get money and they buy the things they need, and they might buy extra of those things if they can afford it, because that is worth more than the money is down the road, and they know that. So their time horizon is very short. They're looking at what can I get right now for this stuff I really don't think is valuable. It's valuable because I can exchange it for things, but long term, I know it's not valuable. So that's a short time horizon. If you have a long time horizon, you are looking 5 years down the road, 10 years down the road, 15 years down the road. And so you've probably heard of the thing, you don't plant a tree for yourself, you plant a tree for your grandchildren, right? How does that saying go? Is it wise men plant trees that they'll never sit under, or something like that? I know that saying. That's a long time horizon. And so what Bitcoin does, when you start thinking long term, you're thinking, well, I'm going to maybe forego this thing I want because I'd rather save it in Bitcoin. So I'm going to fix the car instead of buying a new car, because fixing is always cheaper than buying. People, it's always cheaper than buying. It's a pain in the ass, but it's always cheaper than buying. But you know, like, so I'll say, I'll still drive the beater, and the money I'm saving, I'm going to put I'm going to buy Bitcoin with it, because I know in 10 years that Bitcoin will be worth way more than that car ever would have been worth. And that goes for everything. So it changes your time preference, saying, well, I'm going to think longer term because I know the asset goes up over time, than buying right now because I know my asset or my money goes down over time. So it just changes the perspective on how.
But what causes the jumps and dips then in the value of Bitcoin?
Mm-hmm. That's a good question. And if I could explain that, I'd be really rich. All I can speak to is the history of the last 15, 16 years, or last 15 years, which is how long Bitcoin's been around. It has followed a 4-year cycle. The 4-year cycle coincides with that decrease I spoke of the Bitcoin supply. Not a decrease of the overall supply, but a decrease of the mining block reward. So remember I said in the early days, it was 50 Bitcoin every 10 minutes. Well, every 4 years, it gets cut in half. So it goes from 50 to 25 to 12.5 so we're at 3.125 or something right now, per block reward. So that happens every 4 years. We also follow a 4-year cycle that tends to have a rise in the price over the period of a year and a half after that decrease. Again, we go with a very simple thing that everybody understands: supply and demand. The amount of Bitcoin going into the marketplace drops. The overall supply drops. So therefore the value increases. If there was only so many potatoes produced every year and we couldn't produce any more, and every 4 years the amount of potatoes dropped every year and we could not exceed that, the value of potatoes would go up every, in that same cycle.
And because of what it is, it's less volatile than investing in the stock market, because stock markets are companies. Though they may be historic companies that have been around forever, every company can go bankrupt, whereas
Yes.
Bitcoin would just lose adoption. And if it loses adoption...
Yes. You're relying on other people and the decisions they make when you're dealing with other companies, right? Bitcoin, you're not, because there isn't any one person who's in control of that.
Again, that decentralizes it to, it is in the hands of the miners.
Mm-hmm.
So as long as there are many people mining and
Yes.
checking those blocks,
Yep.
then it will still increase in value.
And the bigger that gets, the harder it is to change the protocol, because it requires so much consensus amongst them all. So why does it go up and down? Well, you see those big swings in anything that's brand new. Big run-ups. There's a lot of euphoria. One person starts buying, so everybody's buying, and there's all this FOMO, and then it kind of reaches a certain amount. Bitcoin follows. It's very free market. I don't need anybody permission to buy or sell. So anybody can buy or sell 24/7, 365. There's no brokers. I don't have to wait till Monday morning to sell my stocks. Sell my Bitcoin, where I would have to do that with stocks. So it's very volatile. Plus, it's global. So you're asleep and somebody's selling Bitcoin in India. So there's these run-ups, and then there's these drop-offs. We call those bull market, bear market, sort of the same as the stock markets. But the pattern has always been a higher high every 4 years and a certain amount of pullback. And then the halving happens, more adoption happens. We have another high that's a little higher again. And this constant peak and valley, with the next peak being higher. And the next, and there's always some pullback, but then it always goes higher again. And so Will it follow that forever? I don't know. Maybe something happens someday that breaks that, and we don't. Some people argue that we're going to see that right now with the institutional adoption. We won't see that. We'll sort of get rid of that cycle because it'll be constant adoption. I don't know. I don't think nobody really can predict that. What they can say is, because it's more scarce than anything else on earth, the value will go up over time, whether it has ups and downs in the middle. But what we have seen is a decrease in that. So, I can't remember exactly what year it was. There was a 1,000x or something like that. Like it went from 10 cents to $100 or something like it was like a crazy increase in the value of each Bitcoin. And then there was a crazy fall off. But we're seeing that every single cycle, we see that less and less and less. So the highs are not quite as exponential, and the pullbacks are, 40% instead of 60%, they're so we're seeing the volatility come out of that. And that's pretty typical of adoption. When
any investment,
anything like that, as soon as the more adopted it becomes, the more stable it becomes. And yeah, I think we'll see that. You got to remember, it's 15 years. I mean, what was the internet 15 years later? I mean, we're way less stable than what we have now. So what causes it? It's a free market, man. People buying and selling. Like, really, when it come down to it, people buying and selling is what causes the price to go up or the price to go down. But so far, there's always been more. At the end of the day, over the long term, there's always been more buyers than sellers.
So at present, it is more of an investment than it is a transition away from our currency.
Yeah. But that's
a long-term investment, not an overnight.
Yes.
Like it's gonna, like you say,
it's not a get rich. It's not a get rich quick scheme. Yeah, that is typical though of most things that people use any monetary instrument tends to be a store of value before it's an everyday transactional medium of exchange. That's pretty typical. If you look back in history, that's pretty normal. So I think we'll see that for probably quite a long time yet. Like I said, the thing that will change that, though, is when businesses start demanding or requesting or even accepting Bitcoin. Once enough people get to the point of saying, oh, this is valuable and I want this personally, then they'll go, how do I get more of it? We always do that. How do I get more of this thing that is valuable? And so they'll say, well, I own a business. I'm going to start accepting Bitcoin, and people can pay me in Bitcoin, and so that is where the switch will be made, I think. I don't know when that happens exactly.
Well, when we stop comparing it to the dollar and we start talking in Bitcoin as opposed to in dollars, would be a huge difference.
Yeah, there just needs to be so much more adoption. I think the ETFs and the I mean, Bitcoin's on the investment channels and the news and everything, like every day. The president passing a crypto law, like things like that. All of that is beneficial for just awareness, because so many people just still dismiss it. But as it hits that mainstream, and they're like, eventually people go, oh, that's 20 over 25% of Americans own some crypto. That's a lot, actually. Like, I think that's a pretty high number. And it's not all Bitcoin. Obviously, there's lots of people that have been burnt, and probably some people swore off it for the rest of their life because they got burnt bad on scams and such. And that's why I'm a Bitcoin only person. I don't do anything else.
Have you looked into other coins?
Oh, I used to be a shitcoiner.
Oh, really? And you hear of all the guys that'll like write a code that will just buy and sell like really quickly all of their different really cheap coins.
Right.
But there are some of historic coins. Like I own some Ethereum. I also have shit coins like Shiba Inu and Doge, and there's a few of those. Yeah. But have you looked into any of those? And do you see those as being not only investments, but potential potential for them to take over as a currency, like Bitcoin could, and take over from fiat currency.
Yeah, yeah. I really don't. And I think it comes back to fundamental core principles. The first thing you have to say is what's different about them than Bitcoin? Because obviously you have first mover, advantage, and that's pretty big. But what is it about them and their fundamental characteristics? And so I mean, we've talked a whole bunch about that, so I'm not going to get into comparing them. But that's what you have to really look at.
Basically, who controls it?
Who controls it, the centralization of it, how much is it, what is do they have a hard cap? No, almost none of them do. There's a couple that do. The centralization, because at the end of the day, if there's people that sit in a boardroom making decisions about it, it's centralized. Because all you have to do is remove those people, and
you've still got a mafia in charge somewhere.
You still got a mafia, or even well-intentioned people, but there's someone there to target, right? Bitcoin doesn't have anybody to target, and I think that's why it survived. Why government, who tended to be anti-Bitcoin in the early days, they couldn't shut it down, they couldn't stop it because there was nobody to go against. Like, China tried that. China said, we're going to ban Bitcoin mining, and all the Bitcoin miners went, cool, we're going to the U.S. And if the U.S. government came out tomorrow and said, we're going to arrest anybody mining Bitcoin, the Bitcoin's miners would just go, cool, we're going to
India, or
name your country. You can't shut it down in that respect. And again, they can say Bitcoin is banned. Come at me, bro. Like, what are you going to do? If I have it, you have to physically show up at my door, beat me with a wrench until I give you my password to get it from me. Well, they can't do that. Like, not even government can do that to every single citizen. Not at this point in most of our countries. They can target a few people here and there, but they can't do it to everybody.
Well, the coercion part is the important part, because they can get you to tell you where the money is and then go gather the money, but they can get your wallet, but to be able to get you to tell them the key. Yeah, here, go ahead, take it. You want to know I lost this for a while? I lost it, and I wasn't worried. And so you could say, well, you lost it, like that means your Bitcoin was all gone. No, I went bought another hardware wallet. I took the seed phrase that is associated with this, I put it in the other wallet, boom, had all access to all my Bitcoin. I didn't care if I ever saw this again. It's just a device. So is that dependent on the quality of the device then? Because you hear of the guys who, like, years ago they bought Bitcoin and then they lost it, and then they wouldn't be able to do that. Yeah, that was the early days when it was a different world back then, because there wasn't anything like this. So you had stuff in plain text on a computer. It was just code, and then it was on your USB, and just like nowadays you just never do that. And to make it simpler, there was a change in the protocol so that everything could be put into seed phrases. And so all of your keys, all the potential addresses you could ever generate using the cryptography, get the word right, are encapsulated in a 12 or 24 randomly generated word phrase. It's not really a phrase, it's not a sentence, it's just words, random words. As long as you have that, you have your Bitcoin, you have access to it. If anybody else gets that, they can access it. So it's a security feature that can work both ways, but if you're smart about it, generally it's going to benefit the holder more than anybody else. And so I never put that on to anything electronic or could be hacked. And you want to stamp it in metal or, secure it in some way. I wouldn't go put it in your safety deposit box, because who controls the safety deposit box, right? So back to the banks. Yeah, exactly. So you need to self-custody that as well. But the great thing is that those 12 words, I don't need this. If I'm going to cross a border and they confiscate this, I don't care as long as I have my words, right? I heard a story back when Russia had first invaded Ukraine, and there was, people fleeing cities and refugees and all that sort of stuff. And
People literally walking across borders with the clothes on their back. Lost everything, 100% of everything. But they had their seed phrase. And so they were able to get a wallet, get access to a wallet, whether it be a soft wallet or a hard wallet, put in their seed phrase, and they had access to all of their wealth that was stored in Bitcoin instantly. Then all I had to do was sell it on an exchange, maybe open another bank account. Like, you've got some rough times, but you can get access to that wealth in relatively short order that way.
That goes back to the protection of the individual, that as long as you have that, that's
right.
yours and that's safe.
Yeah.
As opposed to, like, even to go get to the bank and you're like, hey, I lost my wallet, I don't have anything. Like, how hard is it to get the bank to give you a new card if you don't have ID or anything?
Yes.
Like, bring me 2 pieces of mail and a sworn statement by your neighbor, and it's like, oh my goodness.
Yeah. But there's no permissions for this. This is just...
It's on you.
It's on you. And that's, I think, a scary thing for a lot of people. It is a little bit scary because we're not used to that. We're used to having safeguards put in place by either legislation or companies, and we're not used to taking care of ourselves anymore. And that's a statement that goes on a lot of different levels, So this is, we're not used to our own food production. We're not used to our own physical security. And we're not used to our own monetary sovereignty. And this really, I think you have to get to grips with that, that I am responsible. And if I screw up, it's on me. I don't think that's such a bad thing to have, and that's something that we should be encouraging in society.
Yeah. It's like owning your own house as opposed to having a landlord, or growing your own food as opposed to going to the store. That's, I think, what's led to some of the problems we have in society now.
Yeah.
I even mentioned actually with the interview this week, earlier this week, we talked about zoochosis and how people in cities are living with brutal zoochosis because that's not how you're supposed to live as a human.
Yeah.
You're stuck in a cage in a tiny apartment. No, you may be making tons of dollars, but doesn't mean much of anything if you're depressed and you want to eat the bullets that you're going to spend those dollars on.
Yeah. No, that's right. So I don't know. We kind of got a little sidetracked on that. But when it comes to being self-sovereign in as many ways as you possibly can in today's world,
Bitcoin is
having that absolute control of that money. So you can say, well, I'm just going to have gold. I trust gold because it's physical. Okay. I mean, gold traditionally was the store of value, of choice. But it's a digital world, That guy fleeing Ukraine, he wasn't going to haul 50 kilograms of gold with him, Try crossing a border with gold or even any cash on you. They're going to be like, hold on. What are you up to, right? They can't take away 12 words in your head. So.
Man, thank you for this. I have been wanting for so long to learn about crypto and Bitcoin, and it is something I have stated. We're on a Bitcoin group chat in Signal, and I have it muted, but I see all the little messages every once in a while, and I'm like, man, I should really probably have some Bitcoin. Try to figure this out, but it's always been this sort of like smokescreen. Like, I don't know what it is. I don't know what. Like, it is this thing that doesn't exist, and this random guy made it, and I should trust him.
Well, it's one of the things we have to educate ourselves about, and that's what I would encourage people to is really take the education of it seriously. So on that note, if like book recommendation, I like to read. I don't have a lot of time for reading anymore, but this is probably.
Hold it right up, right in front of your face there.
This is probably the Bitcoin Bible, really. It's I'm not gonna say an older book.
We're knocking mics over.
But it's, the Bitcoin Standard, and this guy has written a couple other books on economics and fiat. But it explains everything. And explains it way better than I did today, essentially. But it talks about it really goes through a lot on what is money. And I think if people really can understand what is money, then they'll see the value in Bitcoin. But he gets into a lot more of the technical side of it. So if you're still nervous about the technology, he explains it all, really well than we can do in a podcast. But
Yeah, I love that it's compared even just to like the gold and everything.
Yeah.
The differences between
Well, a lot of people refer to Bitcoin as digital gold because there's a lot of similar characteristics. But the downfall of gold is that it is very physical.
It's
and we
tangible,
don't live
yeah.
in a physical world.
Yeah.
And I can't fake Bitcoin. It's not fakeable. I can fake gold. Like gold and tungsten weigh almost exactly the same. Like it's not verifiable. So there's this disadvantages to gold. But anyway, that as far as education, that is probably the book. I would exercise caution on what's on the internet based on, like, if anybody's trying to shill anything, like trying to push anything except Bitcoin, then I would exercise a lot of caution. But Bitcoin's open source, and it is the original, and it has the fundamentals behind it that are at this point pretty tested. So, but yeah, great book. Obviously, if anybody wants to talk to me personally about it, I'm always happy to talk to people, and they can reach out to you, and you can vet them or send them along to me or whatever. Like, I'm always happy to talk to people about it.
I have been confused and curious about Bitcoin and investing for years, and quite frankly, not only Bitcoin and crypto, but in the stock market in general. So after our conversation, I was even more curious and reached out to somebody who has 30 years or nearly 30 years of experience in the industry. Unfortunately, due to their job, they can't come on, but they gave me some quotes, and I would like to read them to you with their thoughts with regards to Bitcoin and Bitcoin investing, and it actually might surprise you. He said, "I feel that it's inevitable that we are going to move more towards blockchain technology and digital currency, and one day our grandkids will think that it's antiquated that we used to use paper money, much like the way we think about people who used to use pocket watches. I personally have about 5% of my portfolio in Bitcoin, and there are all kinds of risks and volatility, and it's not appropriate for everyone, but I'm making the long-term bet." He says here in parentheses, perhaps 10 years. "That it might be considerably worth more, and my overall return will be good. I bought my exposure in 2023 when Bitcoin was about $26,000 US. Some studies have suggested that Bitcoin as an asset class is appropriate for about 2 to 3% of a diversified portfolio. If it becomes 5 to 10% of my portfolio, I will likely consider rebalancing. I've only invested as much as I am prepared to lose, but enough to make a bit of a difference if it did well. The way I look at it, Bitcoin hit 10 cents in October 2010, then it hit 10 times to $1, then it hit 10 times to $10, then 10 times to $100, then 10 times to $1,000, then 10,000, then 100,000. It might seem inconceivable to some that it could go to 1 million, but that's just another 10x away. I should also mention that it's extremely volatile and has dropped in half many times in its history. It's certainly not for the faint of heart. It also seems to be highly correlated to the markets, which means that it isn't a great diversifier. During the next big downturn, it will likely go down as well, or even more so. I stayed away from crypto for a long time simply because I hadn't done enough homework and I couldn't determine its future. While its future is still far from certain, you are seeing much better adoption from a regulatory point of view and from major financial firms and interest from hedge fund and pension funds. That is what made me change my mind. I liked the fixed supply and the potentially increased demand. I should emphasize that due to the uncertain nature of Bitcoin or crypto, as a relatively prudent advisor, I'm careful when and where I recommend it." And this is somebody who's been in the industry, in the financial planning and investing industry for nearly 30 years. So if you are looking at getting into Bitcoin, it's volatile, but it could be worth it. Possibly.